Yesterday in my markets a look ahead and last week, I explained to you clearly that we now have a big, fat, ugly yellow flag waving in our face. And I am talking about the debt market, more specifically the 10-year yield. It's still here. That big, fat, ugly yellow flag, well, the real question, like I said yesterday in my markets look ahead, is this yellow flag going to turn red? Because if it is, well, we're going to have to take action. There is no doubt about it. But let's look at the setup this morning. Right now, looking at the 10-year yield, we're at 1.92. If we see this stabilize, maybe come down a little bit, the market's going to love it. If we see this spike again, that's not good. Again, it's going to be yellow turning to red, and the market is not going to like it. Now, I'm not saying here, look, it is very possible that the 10-year yield can go higher. As a matter of fact, I wouldn't be surprised to see the 10-year yield hit 2% relatively soon. But it's not so much where it is, it's how it gets there. In other words, the pace. If we get a gigantic spike here, the market's not going to like it. If we get a gradual creeping higher, okay, the market's going to live with that. The market does not want to see big spikes here. Like, it just doesn't want to see that again. And that would be a sign to me that things are looking a little shaky. What's the real tell? You know what it is. If we get 2%, 2.5, 3, if we just get this uncontrolled spike in the 10-year yield, the key is uncontrolled. All right. If we get, like I said, a gradual rising of that 10-year yield, the market's going to do okay with that. And I'll tell you something else. You know, all of you realize I love the banks, and I've been talking about the banks for a long time. If we do see a controlled rising of the 10-year yield, well, banks are going to do very well with that. Anyway, I promise to keep all of you on top of it. Anyway, let's move forward here. We got the dollar right now with a relative strength of the dollar relatively flat. We got WTI crude hovering around $92 a barrel, 91 and change. Hold that thought just a moment here. So the setup for the market this morning, well, it's not bad. And henceforth, why stock futures are pointing towards a gain at the open, which is in about, well, the bell goes off in about 35 minutes. But none of it matters. If we see, let's say, right at the open, the 10-year yield spike, the market's going to give it back. So keep your eyes on that. And like I said, I will keep you on top of this. So I was writing some stuff down today, this morning, you know, having my coffee this morning. Bitcoin around 43,000. Gold and silver getting a bit higher, 10-year yield. I just covered that for you. Dixie relatively flat, WTI. Now let's talk about energy real quick. For like 2 weeks, I've explained to you, maybe longer than that, maybe 3, I've said that, you know, nothing in this market goes straight up without a pullback. I still believe that energy, it's gone stupid. It's gone full retard, okay? And it needs a pullback. And that scares me a little bit, and it should scare you, because all it's going to do is set up for a leg higher, and it could be substantially higher, and that's going to play right into what I've been warning about lately. We have a tsunami, a super tsunami of inflation coming at us, and it's unstoppable. The Fed can't stop it, nor do they want to. So I want all of you to be prepared for it. All this talk recently about inflation, it's out of control, it's this, it's that. Meanwhile, the Federal Reserve is doing what? They continue to deliberately run their inflation creation machine, issuing debt through one door, buying it back through another door. I am still waiting. I'm still waiting for one of our loving, caring representatives to call the Federal Reserve to account. This is what would happen. I mean, it's just laughable. Let's say, for example, they decide to put, Yellowstone Powell before a congressional committee, they would, first of all, treat him like he's some kind of a deity. Oh, thank you, sir. Thank you for your service. I mean, but nobody is pointing their finger at the Fed and the action that's going on. It didn't happen under the last president. It won't happen under this one. Obama, nope, nobody. They won't say, there's the enemy to you, although they know it. Because you see, they need the Fed to keep propping up the stock market, creating a wealth transfer effect to wipe out the middle class. That's all this is. And as much as you may admire whatever figurehead they want to sit behind the Resolute desk, how have you done with any of them up there? Probably pretty shitty. Yeah, we've been watching, sure, the stock market go higher and higher as our economy has been in free fall. Obviously, this freak, the last freak, the freak before him, all we got here is heroin in the form of debt being pumped into the market, pumped into the economy, creating an illusion that things are really good. Well, we know that they're not really good here. We have an economy in free fall, contracting at its fastest pace in history. I'm going to keep saying the same thing as a percentage of GDP. It's over. The global economy is done by design. Nothing is by accident here. And if they have to throw another scam at us, no matter what it'll be, scamdemic or anything else, they're going to do that too. Whatever they have to do, see, look, the central banks of the world are in control, full control. They cannot allow the global economy to actually do anything because they need and want to fulfill their goal to become the lenders and buyers of last resort. The only way they can do that is by keeping the global economy suppressed. You understand? And by continuing to issue more and more and more debt. Debt is their only product. You know that. Central banks have one product. You can sit there and listen to a Federal Reserve chairperson or a president tell you, oh yeah, we have all these fancy tools, and some have big fat tools. That's all Yellowstone talks about, his big fat tools. But they only have one. It's debt and how they manipulate it. That's all it is. One product. But you see, you're not allowed to know that. You're supposed to think they're just, this great thing. No. But you see, none of our representatives will ever tell you, nor any of our presidents will tell you, that the central banks must issue more debt in greater and greater amounts every single day. They can't stop. Go look at the Fed's balance sheet. You think they taper it? How about no? You think they're going to raise rates in any meaningful way moving forward? Absolutely not. They are determined to finish what they started. And this is, again, to own it all. A wipeout of the middle class. I've been telling you this for years and years, and now it's in your face. Anyway, going back to the market real quick. So it looks like a higher open. We'll see where this goes. Keep your eye on the 10-year yield. Keep your eye on the MMRI. Okay, the MMRI, right here on my website, traderschoice.net, Mannarino Market Risk Indicator, made a pretty big jump going towards the end of the week. Now, again, this is not a crash indicator. It is a risk indicator. And it's a double-edged sword. Like I said, more risk could mean potentially higher gains for me, my lions out here, but it could also mean greater losses. All right, I will keep you on top of that. Keep your eye on energy. Keep your eye on crude oil. It still looks to me, technically, that this stuff should fall, and all it's going to do is establish a new floor, and it's going to go much higher, people. I just want you to be ready for it. Be ready for anything, and always, always, always have the high ground. Keep yourself hedged if you're in this market. If you're not in the equity market, people, what do you need to do? You need to bet against the debt hyper bubble. Let them play their games with precious metals all they want to. The paper derivatives, it's not real. It's not on the elemental chart. You keep holding the real thing. Physical gold, more importantly, physical silver. Yes, I still believe you need to be in cryptos or at least have some in your portfolio. These are anti-debt units. You know that.